Good day, everyone. Welcome back to the markets. Welcome back to the channel. This is the Market Beast edition. We're going to go back over Kodak, this particular instrument. Just go over a few things that I'm seeing in the charts here. As we anticipated recently here, we're expecting a bounce towards the end of the week. It's Wednesday today. So we're going to get into this a little bit more, probably a short video. I just want to point out a few things for those of you who are holding this instrument. So let's not waste any time. Let's get right into the charts here, shall we? All right, so today's October the 28th, 2020. The current price of Kodak is $7.29, down about 5% for the day. Okay, markets are open, by the way. All right, so let's pull up some moving averages and see what we can see here, guys. These are the 3-day candles. Lines are still the same for those of you who are just joining us here. We've identified these two ranges here. We could probably get rid of this line and this line for now. But we were just saying that the prices will likely be trapped, bouncing around potentially in between the $5.50 level approximately up to the $10.36 level where it currently has resistance. Well, it previously showed resistance here. So basically what I'm going to do is just go over some stuff here, see if I could potentially understand what's going on. Because again, I was expecting lower prices. I think we made that video somewhere on this candle right here. And of course, the price has gone a little bit lower, not significantly, but just a little bit of downwards pressure. And I'm just basically waiting on a reversal candle on the 3-day or higher, or even the weekly is probably even ideal for me to see some sort of reversal candle here. But so far, I'm just not seeing it. Now, one of the important things that for those of you who are market participants, we're not traders on this channel, by the way. We are market players. We are investors. We are, premium swap, options or whatever you want to. Just we don't consider ourselves traders. At least I don't. Okay, 90% of traders lose money. Okay, so therefore it's important for us to separate ourselves from the herd, from the crowd, and identify ourselves as anything but a trader. Okay. After that spiel, basically I'm looking for a reversal candle on the weekly here. And so far, as you can see, this weekly developing, we got about 2 days, 3 hours for this weekly candle to close. And so far, there isn't any evidence in the charts, as far as what I can see from this weekly candle, that there will be a reversal. Now, one of the good things about this is that it's below our infamous purple moving average. So that has bullish potential. But again, I'd like to see a reversal candle first before we make our way back up to the purple line here. Okay, that would be ideal for me to enter this market. But so far, not touching it just yet, although it probably wouldn't be a bad idea to enter somewhere here, since I am anticipating at least some sort of bounce or a move to the moving average here at about $9, $8 or $9 towards the end of the week, just to kind of relieve the moon boys there from their pain and suffering in the markets here. But we'll keep a close eye on that. And what else did I want to say? Oh, the one thing that I want to say is, okay, so if you understand, candlesticks and patterns and stuff, or just simply the way markets move, markets behavior, you'll immediately be able to understand that candles like this, these huge, gigantic, that's redundant, but these big candles here, when they come into the market, like this weekly candle on September the 14th, these are obviously buying interest candles. But typically when you see something like that come in, like it normally never just continues the trend to the upside. And if it does, it's likely a move that will be short-lived and it's just going to completely collapse, or slowly grind to the downside as, the market participants are holding their bags and they don't know what to do with them. So when I see moves like this in the market, like they're not really sustainable, they do take time to consolidate or, to kind of just bleed out, shake out everybody who bought in that move up. And I'm also referring to this candle in July the 27th, 2020. Very extreme move, a low of about $2.13 and a high of about $60 in a 1 week's time. I mean, that's not sustainable for a long-term play, in my opinion, of course. But Again, as I mentioned on my original video that probably is going to pop on the screen somewhere here soon, believe it or not, I'm actually bullish on Kodak. At some point, I haven't invested in it just yet, and I know you're not supposed to time the bottom. I get it, but I don't see an ideal opportunity for me personally to enter this instrument just yet. I buy in at previous support or below previous support levels, and of course I sell near or above previous resistance levels. Okay, that's all this is about, guys. This is not complicated. Do not complicate this stuff. Support, resistance, resistance, support. That's it. Okay. So yeah, that's basically what I have to say about the exponential candles in the markets. I'm just a little concerned with in terms of how long it would take in order for this market to move in the opposite direction, which is currently down at the moment. Okay. So what I do is let's just do this. Let's just take a really, really simple look at what happens to the price after an exponential move. Okay, so let's just take this move here from $2 to $60, for example. Okay, what I do is I just outline the time that it took for the market to push to the upside. So we're gonna just kind of put these candles in a box here. God, there's so many lines, man. I hate lines on my chart. Sorry, guys. Let me just erase some of these lines. All right. Really nice, clean chart. All right, there we go. Now I feel better. OCD there. So I'm going to measure these candles here. Right there. Okay. So we're going to count the candles in here. In this box here, we're going to count 1, 2, 3, 4, 5, 6. So this information leads me to believe that the current or the previous pattern that could potentially not play out again. Okay, let's be very clear about that. But this is how I look at it. So it took 6 weeks after this exponential move to the upside here for the price to bottom out and make another move to the upside. So what I do with this information is I assume that what has happened in the past could potentially happen again in the future. Okay, not guaranteed. Again, not financial advice, not your financial advisor. Okay. So after this exponential move here on this candle at September the 14th, that week thereof, had a low of about $5.94 and a high of about $12.51. Let's assume that it would take another 6 weeks or more for it to make another move to the upside. So that would look something like this. We outline these candles here. What do we have? 1, 2, 3, 4, 5, 6. Okay. So we're up against the 6th week as it played out in the past for the price to make a bullish counter move against the downtrend within 6 weeks of time after the exponential move. Okay, hopefully I said that right. Probably didn't make sense, but yeah, stick with me here. So let's just say that assuming that, let's do this. Actually, let's erase this. The previous level of resistance can be identified here on the chart. I can actually, oh, damn it, I'm going to put another line on the chart. Let's identify the previous level of resistance, which is probably going to be here. Interesting. Right at where the price is now. So after closing out this video, I'll probably enter something here to the upside because it's been bleeding all week here. There's probably going to be a little relief bounce towards the end of the week. Again, today's Wednesday, so yeah, Thursday, Friday. We'll see. Okay, so the previous level of resistance can be identified as this level right here from a weekly's candles perspective here. I guess you can say it's there. I don't want to sound like I'm just trying to make it justify a reason to enter the market. It can also be right here, honestly. It can be something like right here at about, let's call it $6.45. So let's just say it bleeds out another day, like tomorrow, you know, it just kind of like says, you know what, we're going to keep bleeding out. And let's just say it even takes another week. So we'll get 7 candles, right? Although this area took 6 candles in order to make a bullish counter move, you know, well, my arrow's just getting better by the day. Let's just say this one may take 7 weeks to make a bullish counter move. Guys, it's not, this isn't like rock solid or, you know, set in stone, right? It's just taking a pattern that happened previously and trying to predict what could happen next. That's all I do in the charts. And this is I think it's a very simple way of doing it, and you should find a simple way for you to do it as well, to have an advantage in the markets, okay? So let's just say hypothetically I enter a position here and I get wrecked and it continues to go down to this line right here. And then we close out the next week, and then November the 9th, we found some sort of bottoming pattern. And then the following week on November the 16th, we get a bullish counter move near the previous resistance level. Okay, that's also a possibility. Okay, but I think it's important to just pay attention to the previous level of resistance, previous level of supports, and I'm pretty sure if we go back far enough, this will be a previous level of resistance. So let's just go ahead and entertain that for a second and go left to look back in the charts to see from the weekly here if we can find evidence in the chart suggesting that. Oops, where are we? Okay, so as you can see here from this exponential move here that happened back in, so Kodak has really nice moves, but they don't really last long. It looks like it lasts for like 2 weeks tops, and then after that it's probably topping out, and then it just moves down. So take this move here, for example, in January 2018. When the move happened, it went up, topped out near the $10.35 level, ironically. And after topping out there, it actually moved down and had some price activity close to this range here. And then, of course, as you can see, if we zoom in here, you'll notice that there was actually one last touch point before just almost completely collapsing to the downside here at the $5.50 level, which is where we're paying attention to. Okay, right there before that catastrophic move and pretty much a bullish consolidation move, you can say, to the downside. Okay, I think you see that. Okay, so yeah, it's pretty clear to me that I guess you can also say this, because I don't want to sound like I'm just trying to stretch the truth. You can also say this level here was a previous level of resistance before the move up. And that level is at about $3.68 up to $4.38. I'm not saying the price is going to get that low, guys, but just notice this little clustered area of price action and then this huge wick before the move down. So I'd say it's pretty interesting that that level had, you know, a consolidation range before the move down. And of course it moved up. And as we can see here on the weekly, it just kind of found a little bit of support there for now. Not guaranteed it's going to hold. It could simply go down and obliterate that level. Okay, I'm not saying it's guaranteed, but I do think it's an interesting landing pad there. If we can get a soft landing, potentially consolidate, present a reversal candle on the 3-day or higher near that level, it would be an ideal place to enter. That's what I'm doing. I'm not saying you do that, guys. Remember, I'm not your financial advisor. Okay. So that's what I'm looking for in the charts, guys. That's all I got for you. Hopefully this video was helpful. Hopefully you've found some, you know, information here to take with you. Leave an appropriate thumb just below the video there. Leave a comment down below. It's Napoleon Macro. I'm going to go ahead and sign off. Thanks for tuning in, guys. My new subscribers, welcome in. Loyal subscribers, thank you guys always. Really appreciate that. And I'll catch you in the next video. Hey, click the video on the screen. Make sure I'm staying consistent with my predictions. If I am inaccurate, be sure to roast me in the comment section. I would appreciate if you help me advance my knowledge here in the markets. And we can all learn together, guys. So I'm out of here. Take care, and I'll catch you in the next video. Bye.